Good morning, everybody. Hey, welcome to Thursday, the 20th. It is Jobs Day. We have those numbers as well as housing starts and permits coming up, and a few earnings as well. We'll talk about that and more when Dave joins us here in just a few seconds. Before we do that, though, let's not forget that there are so many things in this world that you and we have no control over. However, you can take control of your portfolio by knowing the amount of risk you have in that portfolio versus the amount of risk you should have based on your current circumstances. That's why I developed the core retirement design. Give me a call at 863-382-0037 to schedule your core retirement analysis. And with that, we've got Dave coming up next.
At 105.7 Highlands Light FM. Good morning. 8:42 here. That makes it 19 or 18 before 9. I did pass math, I promise. Time to check in on your money and see what's going on Wall Street this morning. With us on the telephone, Phillip Statler, as always, from Statler Financial Services in downtown Sebring. Phillip, good morning. How are you?
Hey, good morning, Dave. I'm doing well. Hey, I want to give you a little compliment. One of my clients said yesterday, he says, that guy you're on the radio with, he kind of knows what he's talking about.
He's very kind. I do sincerely appreciate it. I flippantly say to friends, about the only time I ever get to use my economic major is when you and I start arguing finances. That's about it. So I'm grateful and I appreciate it. So to answer the question, what happened yesterday on Wall Street, the straight answer is absolutely nothing. We don't have very many midweek holidays, but we had it yesterday with Juneteenth. Tuesday was a pretty reasonably good day. We set a new record on the S&P and on the NASDAQ, and the Dow continued to recover. We're solidly in the nosebleed territory, pretty well across the market. And then we start out this morning with a couple of reports that were from yesterday and a couple that start this morning out, and they all sure indicate a slowing economy. Our morning claims number, first-time jobless claims, the usual thing that comes out on Thursday, it was down a little bit from last week, but still more than the market expected. 238,000 first-time jobless claims, which does indicate that we're getting into a slightly more normal employment picture. Then I add that in with the Philadelphia Federal Reserve's manufacturing index. They expected a pretty substantial growth this quarter. We ended up with a 1.3 number, which is just kind of like a fingernail's breadth across, better than flat. So kind of the picture continues to go. We're starting to slow down just a little bit, and the economy is grinding slowly, but it's still on the positive side. By and large, if I were a Federal Reserve governor, I'd say, okay, cool, it's working, wouldn't you?
I would at this point. I like the way the Market Watch put it is the Philadelphia Fed had a minuscule expansion.
Yeah, I was trying to look for the word because, I got a kick out of that. Minuscule. I call it a fingernail's breadth more. Then we kind of got a little bit more of that. Government did work to a certain extent yesterday. We got some housing numbers, and looks like housing is slowing down as well again, doesn't it?
It is, Dave. We had on the housing starts, we're down 5.5%, and housing permits were down another 3.8%. So again, that indicates that there is at least right now a slowing in the real estate and construction market.
Which, once again, is kind of sort of what the Fed's looking for, even though it's not necessarily good for the economy. One of my tip sheets led off with its line saying that investors are now saying the Federal Reserve should get on with it and cut rates. We have the attention span of a gnat on Wall Street, don't we?
Yeah, we really do, Dave. I mean, if you think about it, yes, all the things that are happening right now, at least recently, look like they're good news for inflation. And let's face it, Dave, anything that's going to be good news for inflation is going to be bad news for the overall economy. But that's really what we need in order to hit that soft landing and not go into that recession and be able to bounce back off of that. So, these little tidbits that are coming out just a little bit less than expected, that's really kind of good news for inflation. And overall, as we see that slowing of the economy, yes, there's going to be people that are affected, but if we can hit a low spot and not actually hit a recession, it's going to be good news overall in the long term for our economy.
If Jay Paulson manages to give us the proverbial soft landing that has never been successfully done before, I think the guy might be in line for a Nobel Prize in economics, because it's something that is dang near impossible to do, and it looks like we are. And you and I were using the term while we were going through these rate increases last year. We thought they might have been a little aggressive and a little bit fast, but the analogy is, okay, fine, they had to give us some castor oil. It may taste terrible, but it's something that we need for the short term. And if they do it intelligently, which it looks in retrospect like they've done, that the castor oil is doing what we need to do. It's kind of cleaning our system out, leveling us down closer to 2% inflation, and we're actually getting what we need in terms of an economy that will allow us to grow in reality without inflation artificially increasing the growth rate.
Well, it does seem to be the case. And I know you and I have had some doubts as we progressed over these last 2 years, basically. And you know, we still don't know, right? We still could end up not where you and I think we're going to go, but at least right now, currently, it does have some good looking numbers for the inflation.
Absolutely. I'm generously using the word if, because I still have very little faith in the Federal Reserve's ability to be actually manage an economy's monetary policy that's this big. It's not that they're dumb or anything. It's just that the economy is so doggone big. But, you know, something you and I have been preachifying, you talk 6-9 months for a rate increase to slow down the monetary activity in a marketplace. Well, it's been just about 9 months since the last rate increase. We're now finding out what the castor oil is doing to us, and we may not like the taste of the castor oil, but okay, things are slowing down. We got our 4% unemployment number, which is the traditional number for full employment in the economy. We're now seeing the unemployment claims getting up to close to that normal range for sifting and winnowing in a normally functioning employment economy. It's starting to look normal all of a sudden, and while I know it's unpleasant for the individuals that got caught into this bind, it's something that the economy on a macro basis needs.
Well, it is, Dave, and I think probably next Friday we'll find out for sure, right? If inflation's going the right way, because that is the day that we get the PCE number, and that's the number the Fed likes to look at.
Yep. Just to remind everybody in the process, when we talk the CPI, when we talk the producer price index, those are all the big macro numbers that we look at. Jay Paulson looks at the personal consumption expenditures core number, and it's been stubbornly above 3% all along. If that ends up being down into the upper twos, and we see a 3-4 drop on the PCE core rate, like I said, a Nobel Economics Prize might be in order for the guy, because he'll be doing something that nobody else has ever been able to do in this economy.
Mm-hmm. We'll just have to wait and see.
And then Trump will try to fire him if he wins the election. So I've said before, I have very little patience for either party in the process. Hey, we had a couple of reports out this morning. Even though the market was closed yesterday, a couple got brave and decided to report. We had one of the big publicly traded home builders report the day before yesterday. How did KB Homes do anyway?
So KB did well. They beat on both earnings and revenue. Earnings were $2.15 a share, better than the $1.80 that was expected. So some good news for them. Didn't see anything as far as what their expectations are going forward, but they're trading up a little over 2%.
That ain't bad, especially given the negative numbers we got on housing starts. You and I were giggling a little bit about this because Accenture had one of those reports, the big business consulting firm. I would expect their stock to tank, but they used a magic word, I gather.
They did. Because they missed on everything, earnings, revenue, not good for them. However, they came out and said that they posted this last quarter $900 million in new generative AI bookings. So they've got some work coming out for that secret word AI. And so it has Accenture jumping up 7.3% right now.
We haven't actually made any profit off of it yet, but by gosh, I say AI and my stock goes crazy.
Yep, they did manage to accomplish that.
Now, my cell phone's going to have artificial intelligence on it next year too. It'll
Yeah.
be smarter than me. Apple figures that's going to make them a lot of money as well. Resetting the table, the broader market had a pretty good day on Tuesday. It did nothing on Wednesday, and now we've got the last two trading days of the week, 45 minutes before we open. What are we looking at?
It's a mixed bag. It's the Dow right now is slightly negative, like $8, 0.02%. S&P 500 is up about 0.3. The Nasdaq 100 is up a little over 0.4%. No big movers in any of that. On the other side, silver though is a big winner today right now, up almost 2.5%. Dave, a big jump to $30.30 an ounce. Gold's only up about 0.4%. Crude oil is up about 20 cents more than what it was yesterday, but it's about 0.3% to $80.95 a barrel.
Oh, poop. You must have filled up your SUV or something and increased the demand. Overseas markets, the Asian Pacific Rim, was not overly happy at 6 a.m. this morning. Things were generally off by as much as 1.5% on the mainland Chinese markets. The rest of the markets were kind of fractionally off. Europe is kind of looking at our numbers as on the economic side and saying, oh, okay, fine. Overall, European indexes up between 3 and 0.4% halfway through their trading day. My retirement is coming someday. I don't know when, but it's coming. That means I'm starting to look at the risk in my portfolio. How do I use you to get some eyes to get the risk out of my retirement plans?
That's why I developed the core retirement design to really measure what the risk is in folks' portfolio. And so give us a call at 863-382-0037 to walk through our core retirement analysis. And then join us this weekend for the Statler Financial Radio Show, 6 a.m. and noon on Saturday, 10 a.m. Sunday morning on Highlands News Talk, 7:30 a.m. and 95.3 FM.
And us again tomorrow morning here on Light FM. Phillip, thank you so much. We'll catch you then.
All right, man. You have a great day.
Be well. It's 105.7 Light FM and Statler Financial Services, Phillip Statler.
Coach Stan, I want to thank you for joining us today. Hope you have a great day. I look forward to speaking to you again tomorrow. Take care now.